obviously all my friends are from the stock market. Bharat and I go back, I think, 30 plus years. Uh, Trust me, I never discuss the direction of market because it is like, discussing uh, which political party is better for X country. It's endless discussion.
But you are an investor of mid and small cap, so you have a better hold on those kind of sectors and segment. Maybe your inputs on that.
So my view on investing has changed a lot in the last 30, 35 years that I've been around. When in the 90s, when we basically, then the markets became more matured, uh, and let's say more trading volumes started to happen. And India became somewhat of a reasonable size market. Our views were governed in large part by what Warren Buffett had written in his letters. And Bharat's views are also a reflection of those. So are views of most of us from that generation, people who are in their mid 50s to mid 60s, when we entered the markets, which we were lucky that we entered when India just opened up in 91. And we were in our mid 20s. So it was just pure luck that we got into the markets at a time when India's real big journey of growth started. So we cut our teeth learning basics of investing from Buffett and similar writers in the US. And they taught us how to look at businesses, and there was very valuable learnings for sure. Uh, Now, many of us have remained there with those learnings, and it has worked very well for them. I have taken whatever I could take from them, but I've also then learned a lot more things, which, or let's say not learned, understood a lot more things about investing than I might have understood in the 90s. And one of the biggest learnings and the changes in my investing thinking that has happened over this journey is that I have now started to look at investing as only a probability game rather than a game with very certain outcomes, very deterministic outcomes. I have learned to become more humble with my own ability to forecast the future. When you are younger, you are far more certain. When you have more data under your belt, you become far less certain. While it should be the opposite, but most of us actually start to know how foolish we were at different points in the cycle, how many bad errors or judgments we all made. Okay, when you're young, you've not got so many things under your belt, so you think we can conquer it. That's probably what the last 4 years of Indian investors believe. They will also learn, and it's a good thing to learn. So my learning today is that there is no certainty beyond a certain point in time, which I believe is roughly 1, maybe 2 years in most businesses. And obviously, over time, certain businesses have become much more volatile and shorter in terms of their life cycles. Uh, and of course, older businesses like autos or steel or cement, which will remain for a long time in some shape or form, they've also become relatively more exposed to tariff wars or some other elements which probably back in the 80s and 90s when India was a high tariff country, that wasn't a risk. So my view has changed dramatically over time, that now I believe that it is only, uh, I don't want to use the word, but it's a series of bets at the end of the day. Now, I can talk more freely about it because today I'm in the fortunate position to be able to have an asset management company with only one client, and that is me.
Yeah.
Uh, Bharat is a very brave man that at this time and this age, he still wants to deal with public money. For me, I find the mental peace of being able to manage my own money very liberating. But like I said, and each to his own, and there's not a comment one way or the other. The fact of the matter is that in my own investing, I can be more honest about what it actually is. And what it actually is a series of bets. Now, if you tell that to a client, he say, to gamble, I'm not going to give you money. But the long story short is, ultimately, we have hypotheses about company. We believe certain outcomes, but it's still a bet. And like in all series of bets, it will have certain outcomes. So you have very little idea of what is really going to be the big winner in your stable of horses. That something will win, you can be somewhat confident, provided you have a large horse, large stable of horses. If you have a very narrow stable of horses, all 5 might be duds. Okay? So these realizations have come to me, they made me more humble. And which is what I was discussing. I was in Bombay last week, and I was discussing this with a fund manager who's a very old friend like Bharat. You know, we go back 35 years, very successful, very bright. And we were having a discussion about this philosophy of investing. And I was saying that my view today is that even if a company comes along, which I don't truly believe in, okay, but I believe somewhat in it, I will still take a toehold position in it, rather than just outrightly reject it, saying that this will not fit. I'm not saying that you have to buy everything, that's not the point. But the point is today I will buy more number of shares, more number of stocks than I would have bought in the 90s.
A small stake and then maybe increasing with the
Because,
winning.
yes, because I do not know for sure which of these will turn out to be winners. And many of the stocks that we now recognize as winners were not winners in the first 1 or 2 years of their birth. So, you know, everybody talks about Rakesh's bet on Titan, but that, I can tell you, Titan was one of the worst companies I have ever personally seen. From the late 80s to the 90s, till actually not even the watches business was not going anywhere. It was a dull business. And by the way, I was involved in the financing of the watch business, of the project itself in the 80s. So I knew the company inside out, highly inefficient operation, typical Tata bureaucracy. You know, it took one Xerxes Desai to, you know, really change the company. But that happened 16 years after the company was born. Yeah. So in life, we compress time frames and say, okay, he bought and the company became great. No, there's no such thing. He had bought in the late 80s, bought in the 90s, waited 12, 14 years. You know, is that something we can plan? No, we cannot plan it. Stuff happens. I'm more humble, more fearful about my own abilities today than what I was in the 90s. Therefore, I am more open to taking larger number of smaller bets than
Smaller bets.
Because when you take a small number of large bets, you are very certain. That means you know that if I buy 5 stocks, they're all going to be winners. I have no such confidence anymore.
Yeah.
So that's been the change in my thinking. I will take toehold positions in even stocks that may not meet the highest quality test, because I do know that from a probability basis, out of this pack also some massive winner will come. Right? And stock prices ultimately change perceptions that we all know. And we have one of the largest groups in India today. What the perception was 5 years ago and what the perception today is, I mean, I'm not talking today, I'm talking, let's say, 15 days ago. Okay? We know stock price, market cap determines what we think of the person. You know, it's like what Warren Buffett said, which one of the best things he's ever said is that somebody asked me that, how come you talk so much sense? And he says, no, I always talked sense. It's only that you listen to me now because you know my net worth.
Absolutely.
Before that, when I was managing $1 million, you wouldn't give me the time of the day. But I was always talking sensible things. So market cap, stock price determines what we think of it. I would rather get in at the basement level.
Yeah.
In many stocks, because I have no confidence of being able to predict with great certainty which of these or how many of these are going to be great winners. That's my evolution as an investor. Yeah. The other thing I believe in is that one needs to keep evolving also, because this is a learning game. Okay, Bharat reads 8 hours a day. Sometimes I get 8 hours, sometimes I get 2 hours, but all of us grew up in this business reading a lot and reading a diverse range of topics, not necessarily just investing. Because the beauty of investing is it cuts across so many disciplines. It's not just about knowing ultimately what is investing. You need to know 5 ratios. 5 ratios, that's it. Return on capital, return on equity, price to book, PE, price to sales, free cash flow. These are only 5, 6 things. For this, how many hours of reading will you do? The reading is about learning when to apply what. It's like in cricket. There are only a bunch of shots. Okay? But to be able to play that under pressure in front of 100,000 people, that is what the learning part is about. Yeah. So the learning that I do on an ongoing basis only teaches me one more thing, that keep your mind open to change. Don't become so dogmatic about your methods that there is no room to be able to change.
Yeah.
So I like to keep that perspective. I want my game to remain as open and as flexible as possible, which is not easy as you grow older.
Yeah.
You also tend to become maybe more rigid as old muscles, old arteries. Everything becomes more rigid. That's a challenge, but I like to believe that I'm able to accept more changes as I go along, precisely because I'm less confident today than what I used to be.